Hey, expert investors, Paul here. With all the coming changes we have in our market and second wave and lockdowns and pandemics and scamdemics and multiple offers, are the rents falling, rents increasing? The number of questions we're getting, the number of people wanting to book calls with us is tremendous. And I wanted to get this information out to you so you feel like you're being informed, but being informed in the right way. Not to say that I know everything, but we're doing our research here. This is just one example. So one of the people that we follow fairly closely is a gentleman named Benjamin Tall. He's a bit of a realist, and he is not a fearmonger, and he's not a exaggerator in his economic predictions, which is one of the reasons why we like him. And he's been fairly spot on in a lot of ways in short-term and medium-term predictions. So he's someone we pay attention to. He's a head economist at CIBC World Markets, and he's speaking all over the place. So if you're not paying attention to him, do it, because it's highly recommendable. So talking about the housing sector is stability in prices across Canada, mostly in the GTA, and rental housing demand, which is something we always want to know about as investors. So one of the big points I want to touch is right here. Let me just highlight it. So 80% of the jobs lost because of the recent pandemic were in the service sector. Many of them were low income and many of them were renters, so the impact on rent was on rent as opposed to home ownership. Now, that's not his opinion. I'm taking a quote from a presentation where he was sharing facts and figures. So you're gonna have to trust me here. You can probably get a copy of the presentation if you wanted to, but of the jobs that were lost during the pandemic, 80% of them came from the service sector, so hotels, restaurants, that kind of thing, travel and tourism, the service sector. And a lot of them were lower paying jobs, lower paying jobs. So they didn't have a monster effect on the home ownership market, okay? Not to say that those jobs aren't important, we need them around, and that we like those sectors to turn around and come back up when this is all over. But most of those people were renters, because at those incomes, they can't afford to buy a house in the GTA or even in the Golden Horseshoe anyway. So the impact was on renters as opposed to people in home ownership. Okay, so that's a big deal when you hear about lost jobs, the economy's crashing. 80% of them were in the service sector, not affecting home ownership. We're seeing a situation where home ownership actually went up. Why? This is what we've been saying over and over again. Because 25% of Canadians are telling us that they consider buying another unit during this recession. Why? Because their job is still there. Remember, 80% of jobs lost in the service sector. So my job is still there, your job is still there, very likely. And rates are in the toilet, absolute lowest I've ever seen in my life, you've probably ever seen in your life, and it's now a buying opportunity. So if you have your job is stable, you have cash on the side, you want to invest, what are we going to do? We're going to buy more properties when the opportunity arises, okay? Because their job is still there, their income is still there, and interest rates are in the basement. That's an opportunity that they've been waiting for, and that's why we're seeing some demand come from domestic home ownership and not so much foreign. So all this talk in the past about, the foreign buyers are buying everything, not really. There's multiple offers going on right now, and it's not so much from foreign people, it's from domestic homeowners and from investors like us getting good properties at good prices while rates are very low, okay? Now, rental housing. What do we got here? So, a couple points to, let me highlight that too. A couple points to talk about. The rental housing demand we have comes from 2 or 3 sectors. So young people moving out of their home and going into the market. Now those people, now that the market is as high as it is in some areas, especially in the GTA in Toronto, they cannot go out and purchase their first home. They have to rent first before they go and purchase. So that's fueling the rental market. And the second big one is the immigration that's coming into Canada. So 350,000 immigrants come into Canada. About half, 40 to 50% of those will come to the GTA and Golden Horseshoe. And those people need places to live. And not nearly all of them are buyers. Most of them are coming into renters. So now that things are what they are, they've lost a lot of service sector jobs and lower paying jobs, those people are now, the younger generation is going to stay at home for the foreseeable future, at least for the next 6 to 12 months, until the service industry and tourism picks up again, okay? So that's less people going into the rental market. And immigration has slowed tremendously, obviously, because borders are closed, US is closed, et cetera, et cetera, et cetera. Less people are moving around, so there's less demand in rental. So Benjamin Tall as a whole sees our values and pricing across Canada, especially the GTA, having a V-shaped recovery. So we were doing very well, we had a little lockdown, there was a little bit of a bump, and now we're sort of coming back up. But the rental housing, he expects to be soft for the next 6 to 12 months. And this is why. Because young people are not adding into the demand, and because immigration has slowed down and they're not adding into demand either. Now, what's good for us in the Golden Horseshoe, especially places outside of Toronto and the GTA where we are primarily investing, so that's Hamilton, Brantford, Kitchener, Waterloo, Cambridge, Guelph, Niagara region, St. Catharines, Niagara Falls, Welland, Fort Erie, these places, Barrie, are really up north to the east side in Durham region, where the places we're investing is that many people are coming out of the city because they're not working in the city anymore and they can stay home, and they're looking for rentals and housing outside. So the demand for rental has been higher for us in our experience in Hamilton and Burlington and Niagara and Kitchener and these places than it has been in the city. So we're not seeing the slowdown in rentals. It's only in certain sectors. Now, where the slowdown is the biggest is in downtown Toronto. The condos are much slower, to rent, and rents have dropped anywhere in like the 5 to 15%. And that's a legitimate number, check it yourself. So as a whole, yes, some definitely soft demand in the core in the city, but outside of it, it's been stable. Is it growing? I would say it's about stable right now in terms of demand, and prices are about stable in those secondary markets we talked about, but things are still renting. From personal experience, from all the investors that I work with, and I coach over 200, everybody's renting their units, and for good money. Now, are prices increasing from, rents increasing from spring to fall like they did last year? No, they're staying stable from what they were in the spring to fall 2020, which is still a good thing given what's going on. So that's our update for this week. If you have questions, book a call with me, and we'll see you in the next event.